Welcome back. You're watching Markets at 12, and remember that along with the equity markets, the money market is of equal importance. Rupee movement is extremely critical for the Indian economy. It strengthened slightly today, and anything below 95 is definitely a very good news. Remember the RBI's measures, first of all, to strengthen rupee, to get more foreign inflows coming in, especially in the debt side. And on the other hand, also remember that because of elevated crude prices, because of the war situation, crude is much more expensive because of rupee that had also weakened. Also, rupee strengthening will impact the FII inflows. Let's get chatting with Abhilash Koikkara, who's joining in. He's the head of Forex and Commodities at Nuvama Professional. Abhilash, pleasure speaking to you on NDTV Profit. Of course, rupee movement is extremely critical for our economy, government, as well as for our markets. How do you see the rupee movement at the current level while many measures are taken and the biggest event of now sanity on the war front? If the peace deal is getting done, crude prices are coming down, with which rupee had been moving in tandem actually. How do you see the rupee movement going forward? It has strengthened today.
Good afternoon, Nisha, and thank you for having me on your show. So on the rupee side, we are mildly biased towards a positive rupee. We feel that the worst of the rupee is behind us. What the lower levels which we saw close to 90, what the lower levels which we saw close to 97, it should be between 92.5, 93 on the higher end for rupee, and probably we should protect, or kind of the 97 should get protected in the near term at least. A few factors which we feel why rupee should be traded with an appreciative bias. First is there are some structural changes which have happened, right? What were the reasons why rupee depreciated? One was obviously the balance of payment. So we clocked around $23 billion of balance of payment in last financial year. And the market consensus was that with the higher oil and outflows, we would probably see a $60-70 billion of balance of payment for FY27. However, as you kind of alluded to, the RBI measures, one, the FCNR beat, which would kind of bring in close to $50-60 billion in the next 4 to 5 months, as well as concessional rate of hedging for external commercial borrowing, which will result in higher overseas financing for select PSUs, should get another $10-15 billion in. And the lower oil prices, right? We have to be mindful of the fact that oil has corrected close to 33% from the top, or the near-term top, which we are seeing close to $120 a barrel. So all this put together, now our view is that we might see a flattish balance of payment, and if debt and equity market flows support in the second half, we can kind of move into a positive trajectory, which is a strong support for the rupee and to ensure that rupee depreciation doesn't happen in the future.
Right. So Abhilash, the point that you mentioned of 92, 93 levels of rupee, that's the level of rupee we haven't seen since the war really started. What is the timeline being set of fruition of some of the measures, as well as the impact of war peace really coming in on these levels being hit by rupee? What is the timeline that we are looking at?
So we are looking at the next 3 to 6 months. So probably by this calendar year end, we should touch between 92 and 93 is our view. And if you look at the real effective exchange rate, right, of rupee, today we are trade weighted real effective exchange rate is close to 90. The levels were last seen in 2013 when we are part of the fragile five, right, or so-called fragile five at that point in time. So now the competitiveness of rupee, if this peace deal sanity sustains, rupee is very competitive both from an export angle, export competitiveness, as well as for the capital flows to come in. So because of that, we feel that in the next 3 to 6 months, we can see 92, 93 levels on the rupee.
And also, Abhilash, there were some unconventional measures that have been really resorted to by the central bank in order to arrest the fall of rupee. That was because of the unusual, circumstances of the war situation. Do you see the RBI in future unwinding that and reversing some of those measures, and or will it be a wait and watch and let it play out and strengthen the rupee and do? What is the outlook on the RBI's outlook on and the measures and action on rupee front?
Yeah, so see, RBI has been very clear, Nisha, that RBI is looking to correct the volatility of the rupee and not kind of define a level for rupee, right? So some of the measures which were brought in, that was because there was excessive volatility in the rupee and speculation, at least in the offshore markets. Now, some of the measures which RBI had brought in, they have already reversed, right? For example, exporters were given a time period of 15 months to get their proceeds in, which was earlier 9 months in, right? Now they are reset it to 9 months. So that means more exporters will hedge and more money inflow will come into India. So I feel that RBI will keep on adding measures to boost the rupee, because if you look at even the RBI's forward book, right, they have close to $100 billion of short forward position as on April, right? So it's not that RBI is not taking measure. I think they will continue to take measure, but they will not click to a particular level. They will look at correcting the volatility or extreme volatility of the rupee. So some of the measures like export remittances, they have already auto corrected and got it back to the pre-war levels.
Right. So, Abhilash, many aspects there, but of course, rupee strengthening will be a good news for the economy. Thank you so much, Abhilash, for joining in. And he is from Nuvama Professional Client Group. That's all the time we have on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much for tuning in.